Hey guys, welcome to another video. This money is all about smart money based on the vote that you guys did. So I said what video do you guys want today, and you said smart money. So here we go. Let me clean all of this. So how this thing is going to work is we're going to be focusing on the higher time frame. So it's called PWH and PWL, okay? And essentially it's a very simple technique. It's a liquidity based technique with a bit of order block, and yeah. So what does this mean? This means let me just write it down here. Previous, oh, that is so bad. Previous weekly high. Yep. And this means, as you would guess, previous weekly low. And essentially it's basically one candle that looks like this, okay? Let's put this here, something like that. I'm just doing a rough idea. So basically from the open of the candle until the close of the candle, this move is here to here, okay? So this is basically this. So previous weekly high, and this is the previous weekly low. This is the previous week, okay? Not the current week that you're in. So yeah, let me go and show you a real example. I'm going to turn this magnetic thing on so I can draw the thing properly. And I'm going to be on euro dollar. So if you look at the structure, we're making lower lows, lower highs, lower lows, lower highs, yeah? So this is a very bearish structure. So we're going to be looking for sells potentially. Let me remove all of this. So we're going to mark our weekly lows, which is here, and our weekly highs, which is here, okay? So now this is when you go to the 1 hour, for instance, and you're going to put like a little blue area like this. Actually it needs to be a sell, so let me go to the sell. And all of the noise that happens around here, around this area, we are not interested. We are looking for that very high probable trade, okay? Let's play it. All of this, we are not interested. So it might take a while to form, but you can just put your alert and you can do your other style of trading. This is just more of a swing and a very high probable trade. So let me try to skip all of this. Let me go to the 4 hours so we can skip faster. Oh, okay. Oh, a bit too fast. Okay, so what price is essentially doing, it's retracing. Okay, we know the high time frame is bearish, but this lower time frame is bullish. Okay, so it's just a retracement to a to this level. Until here we don't do nothing. Okay, this is a trap. Okay, why? Because a lot of people who are not looking at the high time frame, they would think, okay, we got some sort of order block here, so we broke structure. When it comes back here, I will buy. If they don't use confirmation, they're just gonna you'll see what's gonna happen. So let me, okay, I'll leave this for now. All right, so we wicked out, which means we took the previous weekly high. Okay, if we go to the weekly time frame, you can see that this was the weekly high and we wicked it. Now what you're looking for is a break of structure. Somewhere here would be nice. So this is the goal. So we want price to break here and then form some sort of structure. Yeah. And once it breaks this is going to be our order block zone. Come back, we sell. Okay, that is the game plan. And here we do nothing. Oops, we just let price do its thing. Okay, so here price is playing around, you know, getting these people interested. Essentially it's going to just eat through the stop loss. Boom, see, stop loss taken. Now here, what do? What? Oh, what's going on here? Let me delete this and this so I don't mess it up. So we wicked out, which means we took liquidity from here. Let me just Got liquidity. So this was liquidity, okay? We took liquidity from the high time frame, which is the weekly high. This is known as hidden liquidity, okay? There's visible liquidity like equal highs, equal lows, but this is hidden. So we know the price took the equal highs, not the equal highs, the weekly highs, and we have a nice break of structure. So let's delete this because these people, they're all gone. Stop loss has been hit. Here you would mark your order block. This video is not about confirmations and stuff or how you can do your entry. That's on you. You should know. This is just giving you how you read market structure and find good POIs, point of interest, like this order block. You can refine it if you want, or you can just keep it at this. It's entirely up to you. Sometimes when you refine it, you can miss the trade. So I'll just keep it at this. So we broke structure. We are retracing back to this area, and also price left some hints behind. Look at that. That is imbalance. So price is going back, likely to fix it. I'm assuming when it gets to this area, you've already done some sort of confirmation based entry, and then you would target where? You would target the lows of the week. So something like that. Okay. So everything perfect. So this is the imbalance. Let's see what happens. Perfect. So price cleared all of this imbalance, tapped into that order block. You could have even done this 15-minute order block like that. So you would have even a better RR. But we played it safe. No problem. No problem at all. Let me clear the imbalance. And now, because the higher time frame is saying we are bearish, we don't even care about anything else. You might say, what about here, Panda? Here price can also go react to, but since we broke structure from this leg, this is more fresh and is more reliable. But price can also go here. So you might do like half your risk here and then a half risk here, okay? But for now we go for this. And then sure enough, because this is a demonstration, come on. I think my internet just stopped working. Oops. Oh, here we go. And yeah, this thing just look at this. More than 17R. Your target would have hit within a few hours. Did we drop even more? Oh Jesus. Yeah, this thing just went. All of this was based on the weekly time frame. And this is essentially how you trade the weekly lows and weekly highs. Let me see if I can find weekly lows so I can give you an example. So we can see this is the weekly low and this is the weekly high. And why are we looking for buys? Because we broke structure, we are bullish, okay? So let's go to the 1 hour time frame and see what price does. All of this we're not interested. Let me just speed it up a bit. Okay, there we go. And now we're looking for some sort of break of structure. Liquidity has been taken. Okay, we got some order block over here, and we need to see what price does. If price doesn't come here, then obviously now we got another area of fresh order block. Okay, why? Because we broke structure here and we also broke structure here, so price can come and react from here or here. Let's say it comes to this level and it gives you confirmation. You would target, now since we are above the weekly highs, you would target the next candle's weekly high. So like something like this. Okay, all right, trade has been triggered. Boom, we got our 4R. So this is when I told you guys that if you over refine your order block, let's say in a 15-minute, we over refined it, you can miss a trade. So we can say potentially that this, let's move this here, this order block is here. So let's say we're done like this. You can see we literally missed the trade by how many pips? By about 6 pips. We would have had a much better RR, 11 RR, but you would have missed the trade. So this is why you shouldn't over refine it. If price came to this level, we would have targeted here, but since this order block is the recent leg, we targeted another week's high. So yeah, that's that. Hopefully you guys found it useful. Let me know in the comment section. And by the way guys, you can also apply this on daily and week daily as well. So daily high, daily low, but I prefer the weekly because it's more reliable, because it's a higher time frame. So yeah, see you guys next time. Peace.